What is up, investors? Back again. Another exciting stock analysis today. We're taking a look at one of the most popular stocks in the stock market, and that is Tesla, ticker symbol TSLA. They just reported earnings just now, and so we'll bring those up right here. We'll talk about everything that they talked about in their most recent earnings report. We can see here the stock is reacting very positively to this report. In the after hour trade, the stock is up 5%, although you do have the conference call coming up in about 30 minutes, and you never know what Elon Musk might say during that type of thing. So this could go higher, could go lower, but in general, things look to be positive. This stock has obviously been on a rocket ship all the way up into this 15, 16, almost close to $1,700 per share. We're at a $300 billion market cap. So let's just jump right in. Now, one things that a lot of people have been thinking that Tesla's going to, the reason why Tesla stock has been soaring is because they might be getting put into the S&P 500. And if they put out a gap profit during this quarter, it did make them eligible. We'll get to that in a second, but let's take a look at some of the highlights from the quarter. They increased their cash by about $500 million. Now they have $8.6 billion, which seems pretty healthy for a car company these days. They had operating cash flow of $418 million. This is, less capex expenditures and things like that. So it's an adjusted cash flow. But at $418 million during a difficult time to be doing business, and especially in the car business, seems pretty good. Now, let's just jump right back into the numbers here. So we've got the financial summary. We've got Q2 over here. We have Q2 from a year ago. What I love about Tesla is they actually kind of give you a rolling kind of quarter view. So I like that. So we have automotive revenues here. We see actually year over year it's down, but quarter over quarter it is increasing just slightly. Call that essentially flat. Now, obviously, a year ago things were a lot different in the world than they are today. So Tesla is managing through a difficult time for a lot of car makers and business in general. They're only down about 4% in terms of their revenue. Now, where a lot of that revenue seems to be driving from is these regulatory credits. Notice that those really ticked up in the most recent quarter. We had 354 million in that quarter. And so, and notice a year ago, you only had about 111 million car credits. So they're selling a lot more of these cars with these regulatory credits. The reason why you might care about that is because eventually, I think these regulatory credits might expire. But of course, that depends state to state. It depends on who's handing these credits out, whether it's the federal government or the state governments. There's some states that might definitely keep these on. There's others that might not. But you see, year over year, they really increased. And so that's not necessarily a good thing or bad thing, just something to keep in mind. We've got gross profit here, almost flat year over year, but actually ticked up from a year ago. And so it's showing you that year over year, gross margins actually increased 30%. That's actually pretty nice considering that they actually sold a little bit less cars, but they were able to drive more gross profit through different kind of efficiencies and things that they're doing in their business. So that's definitely a positive sign for investors. We have the total revenue line here, as we see, relatively flat year over quarter, and somewhat flat year over year, down 5% here, as we can see here. Total gross profit, again, up 38% from a year ago. That's really nice. Again, in a difficult quarter where they're kind of having flattish sales due to a lot of things that are going on, they are able to drive that gross profit even higher. Now, how are they doing from an expenses? I think we can assume they're doing pretty well since they're driving gross profit up. Let's see, from operating expenses, they are actually down from a year ago. And as you can kind of expect, they're selling less cars right now. And so things can be down in that sense. So we've got an income from operations here of $327 million. That is an improvement over the previous quarter and definitely an improvement over the previous year. So our operating margins at 5%, 5.4%, call it, and that's actually a high for the data that we have here. Adjusted EBITDA here coming in at 20% margin, and we see here at a 12 million, $120 million clip, and that is beating all these estimates here. as well. And that's actually up 111% year over year. That is really impressive as well, at least from an adjusted basis. Now, moving down to free cash flow, which they report here, we see this is a company that does generate relatively strong free cash flow numbers, and they were able to do it again in this quarter as well. And we see that did impact their bottom line a little bit from the at least from a cash perspective. Last year at this time, they had about $5 billion in cash, and now they got 8.6 billion, and that compares to 8 billion just in the quarter before. So that's a 74% rise over the previous quarter. That's pretty impressive. And they're definitely, I've analyzed Tesla for a long time, and this is from a cash perspective, balance sheet perspective. This is definitely the healthiest I've seen them in a long time. And that's pretty impressive considering what we're going through in the moment. And Model S and X production, this is their higher end vehicles. We see this fell off a cliff. Notice a year ago, they sold 14.5 million of these vehicles. And then this year it's at 15. And now, boom, all the way down. So we lost 59% quarter over quarter, and we lost 56% year over year. Obviously, investors are expecting these numbers to rebound at some point. Now, what's interesting here is Model 3 and Model Y. This is their lower cost, depends on what kind of tax bracket you're in, but these cars are still relatively expensive compared to some cars. But they sold a year ago 72 of the, and now we're up to 76. That is a 5% gain year over year. So that's actually impressive. It's showing you that this is a company. So the reason why I think this is impressive, okay, this is obviously their lower, quote, lower end, or like lower price, probably lower priced car is a little bit better way to say that. Notice that they are still driving these sales in a tough environment, and year over year it's up 5%. But what's also impressive is what I just showed you is that their gross margin is actually growing as well. And their operating margin is actually kind of growing as well, too. So they're selling less expensive cars, but they're growing margins. And I know there's a lot of people wondering, why is Tesla stock so high? Well, there's some decent reasons for that, is because they are scaling up this business nicely, and they're able to sell lower price cars to a larger market and make even more money on those cars than their $100,000 plus cars in the Model S and Model X. So really impressive. So we've got deliveries here. This is what they produce, and then what they deliver down here. You see some delta, some gap in between these numbers, because there's probably some cars that are in production or close to being finished and things like that. We're seeing that these numbers are off a little slightly, not from a Model 3 and Model Y, but the Model S and Model X really took big hits year over year. We'll see. I think what would be exciting for investors is in the coming quarters, these sales of these cars bounce back to the levels that people were more familiar with. And obviously these Model 3 and Model Y, this continues to trend up as well. So there we go. The solar business is in here as well. It's just such a small part of the business. And while it's, and it's actually pretty steady, so there's not much to really report there. Obviously, their supercharger stations, say that 5 times fast, are growing. And this is a moat around the business. I did see one presidential candidate actually in one of his plans was actually saying he was going to build out that was part of his plan. I mean, these politicians say lots of things. What happens is a different story, but I thought that was kind of interesting for Tesla. They've invested and spent a lot of money building out these supercharger stations. What would be interesting is if the federal government starts building those out as well. That might help other automakers, but it also might help more people make that jump into an electric car, and certainly that would help a market leader like Tesla. Overall, guys, this is really impressive, and I can see why. Now, I'm not trying to make justification for a $300 billion market cap on these types of numbers, but Tesla is scaling up the business. The people that are fans of not only the car, but the stock, the story, the thesis is all still intact, even in a very difficult selling environment for lots of retailers out there. So Tesla's still going strong. I would expect their inclusion in the S&P 500 to come as well, although I think a lot of that, not that all of that, but a lot of that is going to be priced into the stock. Now, where would you buy this stock at? Man, it is just on a rocket ship. What I would like to see, if you're just a gambler, by all means, jump in here and buy Tesla shares whenever you feel like it. I would like to see this stock at least make a base somewhere, maybe up in this $1,500 range before I really want to jump in, because I think there could be some negative news. There could be a negative catalyst that sends us back down into the maybe the $1,200 range, the $1,000 range. And when you're talking about a stock this expensive, unless you've got hundreds of thousands of dollars in your portfolio, it is a difficult stock to really scale into. You become overweight really quickly, especially if you're a younger investor. So those are just some things to keep in mind. Obviously, you've got fractional shares as well, and if you're a younger investor and you've got a long time horizon, I would encourage you to utilize that in your investment portfolio. So there we go. Tesla looking good to me, guys. Looking good to me in the after hours. We'll see what happens in the conference calls in the days and weeks ahead. But this stock to me is probably going to base out here in the $1,500 range. They're probably going to have to prove a few more things out before it really gaps up again. But that's Tesla for you. Hopefully you guys enjoyed this video. Leave me a comment below. Consider subscribing as well. We'll be back again soon. Good luck with your investments.